Monday, the 8th of June 2026. My name is Francisco Gaffney, and this is my daily streaming all about governance, risk, compliance, and advisory boards. This week, I'm going to walk through the advisory board operating system, which is the model that you have in front of you in the screen right now. So if you see right in the center is the advisory board. That's the operating system that managed all the things around it in the model. And there are very specific milestones and elements of these milestones. And this is years and years of development to understand that the businesses in certain scale and in the large corporations, they all have the same elements. The thing is actually some of them have very specific departments, people, and groups addressing each one of them. Others are sitting in the founder's head, in your head. Is everything going through you at the same time? And the one that have all these elements is you. And unfortunately, that creates certain bottlenecks and certain deficiencies and challenges for the organizations to breach that 10 million of revenue that some of the companies I've been speaking the past 2 weeks, they told me that they're very proud of being a 10 million company for the past, some of them, 25 years. When I hear that, I don't see, beside achievement, because actually there was a lot of ups and downs in the economies, in the industries, everything in the past 25 years. But when I hear that, I hear also 25 years ago, 10 million has a capacity because of the currency strength. Now that currency strength decreased 48, 50%. So today you don't have a 10 million company revenue. What you have is a 5.5 million company revenue, right? Compared to the last 25 years. So yeah, the number looks similar, but actually the capacity to acquire things diminished by 50% or 40 something percent in the case of US dollar, and similar to the euro. So it's a very proud moment to say, oh, we are a 10 million company, but effectively you should say, oh, we are declining business because everything is going through a single person, is getting tighter, is getting tired, is stretching too much, and the things are getting harder and harder to do. So when you see this model, you can understand where the things are coming from. That is probably everything in your mind. Probably you haven't articulated this in this way, but let me walk you through the system now. On top, we have the scaling. On the right, we have predictability. On the bottom, we have systems, and that is not necessarily IT and software. And on the left, we have the edge. And when I talk about edge, I'm talking about the future, the transformation, the innovation, what makes your company relevant for the future. So you don't be another 10 years being a 10 million company, and then effectively, in terms compared to where you started at the 10 million mark, you had a capacity of spending and investing 10 million, but today effectively the same 10 million worth 2 or 3 million. So actually you are declining rather than growing. So today, if you are a company that 25 years ago were 10 million in revenue, today, if you catch up with the time, probably you should be a 16 million or 17 million company. And you will say, oh my God, I have to double. Yeah, this almost, you have a lot of work in front of you, if you may. Now, back to the model. Inside of the model, you see all the things that probably are in your head already. People, brand, partnership, revenues, assets. An asset could be tangible or intangible, right? Like your intellectual property, governance, risk and compliance, performances, and strategies. And that is the point. A business is not one thing, it's a set of moving parts. When those parts work together, you as a founder has more control. But when they drift apart, so you as a founder becomes the glue that keeps the whole thing together. And this could be a founder like a generation, you got this from your parents or your grandparents. So I spoke with companies last week that they had almost 100 years in the space where they are operating, not only geographically, also in the kind of the industry that they were operating. So that is where things start to really hurt. Because you see, well, this is a family business, a legacy is our values, the vision of our ancestors, if you may. But today, the reality of the business, the reality of the revenues are completely different than 100 years ago, or 50 years ago, or 25 years ago. So let's take a look at three problems with this. Problem number one is you are overloaded. So the business looks grown up from the outside, but inside, too many decisions still go through one person, you or somebody in your family. So pricing, hiring, client expectation, finance questions, supplier issues, risk calls. So why you're taking these calls still, but you have to, and operational fixes, you name it. So you as a founder become the unofficial operating system of the whole company. And it sounds good. It sounds like, well, that's supposed to be, that my father did it, that my family is what we do. But it's also a bit of danger there, because who is going to be the next you, and if he's a next you down the line? Problem number two is a kind of a false confidence. So the company has revenue, that's true. It has clients, it has people, and it has a decent reputation. So you assume the engine is healthy because the whole thing, the whole mechanism is working. Yet under the surface, if you go into the bonnet, there may be customer concentrations that are quite dangerous. I spoke with companies that 65% of their whole revenue year on year coming from only 3 customers. Do you think that this will sustain in time? Probably. I don't say no, but it is a high risk, and because it's so people are so accustomed of this coming year on year on year that they think that actually that's the nature of business. But at the same time, when you see it from the outside, it's quite dangerous, because you lose one of these customers and probably the whole profits of the year are gone. So then other issues are weak handovers. Who is the next person that's going to take the baton here? Or poor data, or messy authority, because everything is revolving around one or two people. Also, you have margin leakage and decisions that nobody has properly tested, right? Now, problem number three. This is what is called the advice without a structure, or without an architecture, or without a design. And what I mean with this, many businesses have very clever advisors, so I don't disregard this. You have accountants, you have lawyers, you have consultants. Probably you're looking into mentors and um, coaches, or specific advisors in sectors that can help you in very specific things. Is that useful? Absolutely yes. But here's the biggest challenge, because it's not in the design. It's everything living in your head. So it's not something that actually work organically. And organically, I don't mean like in a wishy-washy way. Organically, I mean actually doesn't integrate in the whole business operation like the model here. Without a clear operating rhythm, advice arrives like a fragmented. There's a piece of this, a piece of that, a piece of the other. But what it operates across the whole organization. So one person comments on finance, another comments on sales, or other advice on other risk, but nobody's joining the pieces into one company level view, and everything sits in your head. So you might bring a piece of this, a piece of the other, but nothing is designed towards something specifically, right? So we have 4 milestones, as I mentioned at the beginning here, which is you have your scaling, your predictability, how your systems operate to manage everything, and what makes your company relevant for the future. So in other words, imagine a factory where the machines are good, the team is working hard, and the order books looks full. So everything is good, right? But every warning light reports to a different person, right? Now, what happened there? Sales sees one thing, finances sees another thing, operations sees another thing, and you, as a founder, hear all of it, but late in the day, and have to guess what matters most, right? So if you have warning lights everywhere, but everybody has an opinion and nobody's looking into what is the impact of those warnings or these things, activities in the overall business. And when they arrive to you, you have pretty much on the put fires down business rather than operating a business. So in other words, that is not governance. That is a lot of pressure. There's a lot of messy situations that actually cap your capacity to grow or scale your company. Now, as a board advisor, what I will propose to consider is the following. Treat the advisory board as an operating system. And I assume in here that you're looking into an advisory board, and if you're not, consider this. This is not a status symbol. The job is not to create a room of impressive people around your business to take more of your time on conversation. The job is to create a repeatable way of seeing the business. Every advisory board meeting should help you, as a founder, and your leadership team answer 4 specific questions, right? Number 1 is, where are we trying to scale and what is blocking us, right? You can ask this question for yourself. You don't need an advisory board, but an advisory board brings you many other perspectives, resources, connections, and expertises. But here are the questions. You can ask these questions yourself. So the first one again, where are we trying to scale and what is blocking us? The second question that you can ask is, or should you be asking, or you must be asking, is how predictable is our growth in terms of cash, revenue, and asset base? And asset base, remember, there are tangibles and intangibles. The third question that you need to ask is, where are the weak controls that could damage trust, value, or continuity of the organization? And the fourth question is, what needs to change before the market forces change upon us, right? And this is interesting because what makes your company relevant for the next 5 years? I'm not saying the next generation, I'm saying just the next 5 years. What makes your company relevant in terms of the services that you provide, the consulting that you provide, the products that you provide, etc., etc. So that is the weekly art that I wanted to present to you. Today is a whole system. Tomorrow we're going to talk about specific about scaling, which is different from growing. On Wednesday, we are going to talk about predictability that is related to growing your company. On Thursday, we're going to talk about systems. And Friday, about the age, these uncertainties, these ambiguities of what the future is coming, or what is coming next, particularly now with the AI that is everywhere, is really relevant, or how you can make it relevant to you too. And obviously on Friday, we are going to draw a conclusion, if you don't mind. So the important shift is this. An advisory board is not there to run the business for you. And just, I want to clarify this. It's not there to vote. It's not there to replace a board of directors or your executive team. It's there to ask better questions before the business pays for bad answers, or scatter answers, or answers that are very good by itself, but it doesn't add value to the organization overall. So it gives you, as a founder, access to commercial, financial, governance, risk, and operational judgment without needing to hire every expert full time. So this matters for founders like lead firms with 50 or more employees and 10 million of revenue, because the business is now too complex for informal advice, right? Informal, I don't mean actually professionals. I mean that actually is not glued into a full design or architecture as the board advisory system or operating system that we see here on the screen. So, yet it may still be too lean for a large corporate structure. So your company is still lean for a large corporation structure, but actually you can use the same principles to grow your company, scale your company. So you need a sharper insight, but no more weight, right? So that is why the advisory board is perfect. So you may be wondering what you gain working with me, and I'll give you 3 things: business outcomes, differentiators, and risk reductions. In terms of business outcomes, is a clear operating rhythm. You move from scattered issues to a board level view of where growth, risk, and values are linked, right? In terms of differentiator, it is an advisory board model. So it gives you access to an international advisory board members with a faster implementation than hiring one executive and the fraction of the cost, a lower overhead than a big consulting firm, and not talent locked in, and the ability to swap members every 6 months as the company needs to change or as the milestones of the company change. What you want to avoid is group thinking, meaning that actually you have the same people, static board, and then 2 years down the line, the conversation is looping in the same things instead of having new cognitive diversity into the advisory board to help you to bring the company to the next level. That reduce your risk. Is very practical. You're not waiting for finance issues, people issues, control issues, or market issues to become painful. You start to anticipate things and to respond to things rather than, or circumstances, rather than reacting, putting fires down. So you're bringing into the room earlier, naming it clearly, and deciding who owns the next step very quickly. Now, let's wrap up today. And one action that you can take home today and is doable in 30 minutes or less. And I'm going to show you what you can do. And here is the visual aid that is going to guide us in this moment. So you can print or you can draw in a piece of paper the advisory board, and you can to do a cross and only do 4 things. On top, you put scale. On the right, put predictability. On the at the bottom, you put systems, and on the left, edge. So on the picture on the left, you see somebody that everything's in their heads. They have to manage everything. On the right is your advisory board. So under each quadrant, write, for example, in scale, write the one thing that still depends too much on you, right? So just one thing. What is too much dependent on you? And I see owners that have 3 or 4 functions. They have to do the quoting, they have to do the consulting, they have to supervise the floor, they have to go and speak with the accountants and lawyers. So they have to do pretty much everything. And actually, very specifically, a company, 7 years old company, the owner was the only certified safety officer of the company. So just the whole responsibility and health and safety was on that person, the owner. Why that happened? A company with 50 or more employees, he was a health and safety officer. That's where he was coming from, but nobody else certified in the organization. So everything related to health and safety is going back to him by default. That I thought at that point, when I have this conversation with this person, we saw that said, well, if you're guessing why you're burning out, probably because that one thing is already too much dependency on you. You should have to look into who in your organization have the best capacities, skills, experience to certify as your health and safety officer, and probably have a second one too. That's an example. On the right, you write the predictability. Write the number that you trust less, right? So we talk about this family that has 65% of their concentration of business in 3 customers. So which one is the less trustable, or which one is the most trustable, and what will happen if they are gone? So this is part of the exercise. Underneath, you have systems. So write the control gap you will hate an investor, a lender, or a regulator to spot first in your organization. So you can imagine if you applied for a bank loan, if you are trying to value your organization because you want to sell shares to take money out of the table, as they say it, or if you have an inspection, an audit, what is the first thing that you want to see not happening? So meaning that actually people go and say, oh, look at this. Probably something there that is a little bit of a noise at the back of your mind that is happening there. Write that down, because then you start to put in paper things that need to be addressed. And on the left, on the edge, write the market change you are avoiding because it feels inconvenient. And this is a point. Being relevant in the future, beside all the uncertainties and ambiguities that we are handling every day, is something that actually you feel inconvenient because you have to leave your comfort zone. And there's a whole lot of studies about breaking that comfort zone. But sometimes you have to do that exercise at least to be aware what is coming next, and probably you should be addressing, or you must be addressing, for after the summer at least, just to have an idea, say, okay, this is my next objective, my next thing to do, or put an advisory board together to help you to do that. And there you are. This is your first advisory board operating system snapshot. So let's pause it here for today and reconvene tomorrow, because tomorrow, as I mentioned, we move into the first milestone, the commercial acceleration, the scaling. We will look at what happens when the business tries to grow through brand, your people and your partnerships, but you as a founder are still carrying the weight of almost everything. Now, if you lead a business of 50 or more employees, 10 million revenue, and you want to understand how an advisory board operating system that can help you to scale, improve predictability, strength controls, and protect the value of your company, let's have a 30-minute chat so I can understand where you're coming from, where you are today, and where would you like to go, and how we can design an advisory board that brings you 25% revenue increase and 18% more productivity, with a faster implementation than hiring an executive, a lower overhead than a big consulting firm, not talent locked in, and a swappable members every 6 months as the project evolves. So have a great day, and